All right, we're going to look at our next few steps. The third step, after we prepared those journal entries, paying particular attention to that format, we are going to do something called post. We're going to post the information to the general ledger. Okay, the general ledger, let's expand on that a little bit. General ledger. The general ledger is a collection of all a company's accounts. Collection of company's accounts. It'll be different for each company, right? Because they're going to have different accounts. So think of it as it was back in the old day, which was an actual book. They would open up, and inside the ledger would be all their accounts. They'd have an account for cash, AR, supplies, etc., etc. Right? And the reason it's nice is it provides a balance, of those accounts at any given point. Now you can look in the book to see what the format is for those ledger accounts. It's quite involved. It's that many columns, but you're going to see what we're going to do is we're just going to take the debit and the credit column, which in essence is a T account. So in this class, you can use your T accounts for the general ledger. Okay, so after we do each journal entry, you're going to post. So after each entry, post the information. Post just means to move to your general ledger account. Again, feeling free to use a T account for that ledger account. So that means we do our journal entry. Maybe we do cash, common stock, and then posting means we take the information from the journal, move it to the ledger. We said each account is going to have their own T account. So let me just put cash in here and common stock because those are the two involved right now. But of course, we would have one for every account. And you just move it. So let's say it was cash, 10,000, and common stock, 10,000. So keep it on the side, right? So cash debit, 10,000, common stock, credit. Okay. That's all posting and is just moving. Let me show you one more. Let's hit cash again. Let's say that we earned some revenue and our customers paid with cash. Let's say 5,000. Revenue. Post, you just move it. It's a debit here, so keep it on the debit side. Credit, keep it on the credit side. Easy peasy. And of course, we would have explanations. Well, let me show you one more. Let's say that we buy some supplies with cash, 1,000. Yes, now cash is on the credit side. Keep it on the credit side. Supplies, 1,000. Because I just wanted to show you how to total this up when we're done. Because we said one of the nice things is that we could see the balance. So to calculate the balance, we know this asset, for example, everything on the left-hand side is positive. Every number on the right-hand side should be treated as a negative, a reduction to the account. So we have 15,000 on debit and 1,000 on credit. So your net balance is 14,000. And that's how you write the balance. You put it on the side that's larger, which is usually the normal balance side. Okay, one more thing I want to talk about is the posting reference. We said, oh, we'll come back to that posting reference, right? Okay, so posting reference so you're going to fill out this information once it's been moved to the general ledger. Okay, you're going to read in your book how there are chart of accounts numbering. So basically a company, a cucumber, oh my goodness. a company assigns numbers to all of their ledger accounts. So maybe cash is 101, common stock maybe is 301, revenue is 401, and supplies is maybe 601. And I'll let you read in topic, I think it's 3 points. It's here somewhere. In chapter 3, you can read about the chart of accounts numbering system. I know it has a table in there somewhere. I want to find it now. I'm like, I know it's in here. Third grade, you'll probably find it faster than I will. Ah, there it is. It's in topic 3.2. So in 3.2, you can read how they come up with these numbers. It's kind of a little educational thing to know. But for now in the homework, they're going to give you these numbers. Okay. All right. So once I move it, then I put the posting reference in, which is why I said, oh, don't worry about it yet, because we hadn't gotten that far. So this tells the reader that if they want to find the amount of 10,000, they go to account 101. And there it is. Okay, so that's all you do. So once you post, you can go ahead and put in the reference number 301 and cash 101, 401, 101, 601. That's not right. That should be an asset. We'll make it 104. And so that's why I said, if you want to read the chart of accounts, you'll see that all assets start with the number 1. Equity 3, revenue 4, etc. Yay! So now we have done the posting to the general ledger. I'd love to have you try that for the Dursleys. So I'll go ahead and post the solution for that as well, because it's not difficult, right? You're just moving the information. And then the last step in this initial recording process is to prepare an unadjusted trial balance. I'll just call it a trial balance for now. Trial balance. And that's as far as we get in chapter 3. So these first 4 steps make up the initial steps in the accounting cycle, and they're called the recording process steps. Okay, so we get through the recording process in chapter 3. I'll let you see, read about the trial balance in the book. Let me just show you a quick sample of what it looks like. Somewhere I have this. There you go. So here's what that trial balance looks like in your book. You're just going to list all your accounts and their ending balances. So all these ending balances come from the T account ending balance that you solved for. All right, try the Dursleys example. You already did the journal entries, so post it to the general ledger and then prepare a trial balance, and I will have those solutions waiting for you.